Hello everybody, what's going on? So today NIO is down around 4% in the early market session. Paper hands are shaking. That is why I thought I should talk about a massive shift happening right under the surface. And the data coming out of China suggests that the long-term thesis for this company is becoming incredibly compelling. If you take a look at the data shared in the post, the numbers paint a very clear picture of accelerating growth. In the first 5 months of this year, new sales skyrocketed by an impressive 68% year over year. Think about that growth rate in the context of a highly competitive EV market. The initial expectation for the company was to maintain an annual growth rate of 40 to 50%. Instead, they have already achieved a monumental 6-month growth target in less time, completely outspacing original forecast. Now I know what some of the skeptics are thinking. When an EV company scales this quickly, the immediate concern is always margin dilution. Investors often worry that aggressive sales come at cost of profitability. Also, some market observers express concerns regarding almost near-term profitability. But here is the critical piece of information. CEO Lee Bin has explicitly stated that NIO will not sell cars at a loss. They are protecting their bottom line. In fact, the strategic launch of strong sales execution of their premium model, specifically the ES8 and the highly anticipated ES9, are acting as massive margin anchors. According to data, these premium models are projected to help keep NIO's margin healthy at around 18%. This proves that NIO isn't just chasing volume. They are executing a highly sophisticated multi-tiered brand strategy that balances mass market expansion with premium high margin profitability. Now let's dive a bit deeper into the operational update that were recently summarized in the Chinese market review from the CEO himself. There are several major catalysts here that Wall Street is completely discounting. First, Li Bin has publicly reassured investors that he is not worried about the order book for the second half of 2026. Demand is robust. Second, the average selling price for Neo brand has actually jumped by 15% following the launch of their brand new flagship SUV. Think about the pricing power required to pull that off in today's economy. Apart from that, NIO has also reported that despite a tighter overall budget, their research and development expenditure have become significantly more efficient. They are delivering more technological innovation with optimized capital allocation. If you want a visual representation of how fast this company is scaling, look no further than their manufacturing footprint. The F2 factory is currently packed with thousands of electric vehicles as production continues to accelerate rapidly to meet surging customer demand. On the top of that, deliveries of the brand new L60 SUV under the Onvo sub-brand have finally commenced across China. To keep the momentum going, NIO has rolled out their 2026 85, 85T and EC6 Champion Edition. By leveraging their proprietary battery as a service, they have managed to bring the starting price for these premium vehicles down to an incredibly compelling price of RMB 205,000. This structural advantage make premium smart EVs accessible to a massive demographic without destroying the company's core margin. When you connect all these pieces together, from operational milestone to stellar sales and margin projections, the narrative around this company changes entirely. This isn't a speculative play relying on hype. This is a fundamentally sound manufacturing and technology powerhouse that is hitting its stride. By scaling production efficiency, maintaining an uncompromised 18% margin target on the premium vehicles, and successfully capturing new market segment with the L60 and the BAS ecosystem, NIO is proving that its business model is building to last. For long-term investors looking for a resilient hyper-growth EV player with a sustainable path to profitability, the future for NIO looks incredibly bright from here. going into the second half of 2026. So prepare now. With that said, thank you so much for being here. See you next one.